welcome back. Again, my name is Bill Fung. I'm a real estate agent here in the Denver, Colorado area, and Don Opeka. If you did not see part one of reverse mortgages, let's do a quick little recap. First, Don Opeka, I've known you for
20 some years.
20 some years. I've worked with Don off and on and different transactions throughout the years, and he strictly does reverse mortgages. We do have the part one, which will have the link below, so if you miss that one, you'll be able to go ahead and just click on it. Part one talked very quickly just about what is a reverse mortgage and perhaps some misconceptions people have about reverse mortgages and just how you can use reverse mortgages for financial planning. We actually had talked about not only just about people who have homes that are 500 or 600, but also a lot of times that's not talked about, people who have homes 900 or over $1 million and over 3 or 4 million, and how it could help them in strategy. Now in part two, we're going to do a little bit more about advanced scenarios, as well as some of lifestyle flexibilities, estate planning, what happens if the market appreciates or depreciates, those type of things that aren't normally talked about in reverse mortgages. Don, did you have any quick things to say before we kind of delve into part two?
No, let's go through your questions and we'll go there.
Okay, so we ended up with, can you go ahead and buy, at part one we ended up with, can you go ahead and buy a home with a reverse mortgage? And I'll just let Don do a quick response to that, and then we'll move on to some of the other questions.
Basically, you can buy a home with a reverse mortgage if you're over 62 for the FHA product, over 55 with the non-FHA product, and it's just going to take a large down payment, and you'll have no monthly mortgage payments. Okay. You'll still have to pay taxes, insurance, and maintenance, that's all.
Yeah. And we had also talked about, well, what if you have a property now and you're looking to downsize? If you have something that's $1.5 million or 2 million and you want to downsize to $1 million or less, you can do that, correct?
You can do that. One that we did that for the man, because he had so much equity in the old house, and he had a buyer for the old house. He actually sold the old house first, bought the new house for cash, and then we did a reverse mortgage for him after, so he had access to the money that was in the smaller house. So it can be done. It can be done as a purchase transaction. It can be done as a refinance. Either way, in a scenario like that, the advantage to buying the smaller house for cash is that you eliminate financing contingencies and make the real estate agent's life easier.
Thank you, Don.
True or false?
No, that's true. Yeah, I have, and then one of the things we had also talked about is financial planning. I have a couple of friends and clients who have actually gotten reverse mortgages, and they get paid I'm going to say is it a monthly?
They can get a monthly payment. A
monthly payment to supplement their lifestyle, because they maybe don't want to pull out a lot of money from their 401k if they don't have to, or their Social Security, so different things like that. So I do have friends and clients I know that have used this as a financial strategy tool.
And I had actually my first reverse mortgage client, I talked to him about refinancing his loan several times, and he said, I don't want to do it because my investments I could pay it off, but my investments are making more than what I'm paying on a reverse mortgage, so just leave it alone.
Sounds very good. So I think when we're talking about more of this regarding as an investment strategy, Don, you actually alluded to this, if you're looking at, for instance, any of your retirement income or accounts or things in the stock market, versus having to maybe go get a loan where you have to pay it back, when you're right in the middle and you look to the left, am I going to have to liquidate some of my investments, or am I going to have to make a monthly payment? Of course, that depends on your particular situation. But one other option that people are not aware of is that reverse mortgage.
Reverse mortgage, and one of the things you bring up is, as people move into the retirement age, particularly the over 62 crowd, they may still planning to work until they're 70 or beyond. People like me.
No, I'm not telling my age. No, I'm just joking.
Okay. But those people are sometimes in a situation where they're at risk of being downsized. And we had one client come to us, his company was sold, and he was a warehouse manager, and it looked like the company might consolidate 2 warehouses and he might be out of a job. So he got a reverse mortgage to preempt the downsizing and be ready. If that happened, he got rid of his mortgage payment. If it didn't happen, he was okay either way. And it can be a retirement planning tool even when you're working, and sometimes coming and looking at it before you need it is a good idea.
Yeah. Basically, a reverse mortgage can be a safety blanket or a parachute for
yes.
your finances on that.
That brings up the lady who was a healthcare professional. Had no need for money, house was paid for, and but she understood how fast health issues could change. She wanted a reverse mortgage line of credit in place because it gave her access to a couple $100,000, and she knew that when health issues change, having money available was sometimes helpful, and it wasn't always a good time to go through a mortgage process.
Okay. I'm going to jump back quite a bit here. We didn't talk about, but reverse mortgages requirements in Colorado, they're really not that different. But for someone who's coming out of state, can they start the reverse mortgage in another state and then use, I'm going to say, that lending institution to buy a home here in Colorado, or would they be talking with, quote, a Colorado licensed mortgage broker that does reverse mortgages here in Colorado?
You really want to talk about licensing issues?
Try to make it really quick.
Okay. If they are licensed in Colorado, an out-of-state lender can do a reverse mortgage here. If they don't require a license and can do business here, then they can do a reverse mortgage here. Understanding that only part of mortgage companies have to be licensed in Colorado. There are a lot of unlicensed people who are legally originating licenses from out of state. So
okay.
We won't go down that rabbit trail today.
So one thing you want to definitely do is, if you're talking with a loan officer in any type of loan product, you want to make sure that they are actually licensed in the state on that. So I thought I would just bring that because we didn't talk about that earlier. Let's go to the questions of safety and other concerns about reverse mortgages. No one ever has questions about regular mortgages because they know you either pay it off, or if you die, it still needs to be paid off.
Right.
On that. But let's look at when does a reverse mortgage needs to be paid off? Is it, well, I'll let you go on that one.
When the last borrower leaves the house. If all that's required to keep the loan in place is you have to live in the house, pay the taxes, pay the insurance, maintain the house, and the loan stays in place. If you leave to go to a rehab facility for new knees, new hips, and all the other new parts that we get as we get older, but you're coming back to the house, that's fine. If you move out to assisted living or independent living and you're not coming back, then the loan comes due and it's time to pay it off. If you die, the loan will come due at that point, and your heirs can keep the house if they just have to pay off the loan to keep the house.
Okay, so I'm going to rephrase it again. Let's look at it this way. What I hear, Don, is that if you have medical issues where you're in the hospital or getting some type of body replacements and you happen not to be in the home for 2, 3, or even 4 months, that's okay.
That's okay.
Okay. But the other part of it is if you pass away, a couple different things can happen, but we'll talk about that. But if you go to a care facility and it looks like you're no longer going to live in the home, then the reverse mortgage does have to be paid off.
Right.
Okay, so we'll go a little bit more into detail. So there's a reverse mortgage on the house.
Right.
And we'll take the easy way out. The last person in the house, if it's a couple, has now died.
Okay.
What happens?
Loan comes due.
Okay.
Typically what you're going to do is sell the house, pay off the loan, walk away with money. That's the intended plan.
So, and I want to make sure people understand this because I really kind of know it, but I want to voice it. So let's just say either mom or dad passes away. We'll make
Right.
it easy. So now there is a daughter or a son that's left.
Right.
So the daughter and the son are left with selling the house. They go ahead and sell the house, pay off the mortgage. What happens with the leftover money, what we would call profit, or we would call the equity? Does it go to the son that sold the house or the daughter that sold the house, or does it go to the bank? Because that's part of the misconception.
It's not going to the bank, it's going to the estate. So
Okay.
however the borrower has arranged his estate, is where that money's gonna go. It can go by will, it can go by beneficiary deed, it can go by a lot of ways, but basically it goes into the estate.
Okay.
And one of the big misconceptions that I see is people say, I don't have any children, and so I'm gonna just let the bank have the money. And that is depriving them of, or their favorite charity, of some money, because as one of my borrowers did, he made arrangements for his church to get the proceeds of the sale. And so when the property was sold, the money that came out went to the church. And those arrangements can be made as well.
So even as a reverse mortgage, you could use it as the leftover proceeds to a charitable cause that you believe in.
Right.
Okay.
Or another borrower, as she was dying of cancer, she sold the house to somebody at a reduced price, just enough to pay off the loan, and somebody got a house for $150,000 bargain.
Wow, amazing.
By selling it for what the loan, and chose somebody to bless. So there are blessings that can come out at the end, as long as the borrower has made the plans. And the important piece that's often missing is people don't plan for that situation very well.
So obviously it would be a combination. You would want to talk to a financial planner and maybe even an attorney to make sure all the paperwork is proper so it flows. Right. So that if you do want to give some money to a charity or some other institution after you pass away, the reverse mortgage allows you to do that.
Right.
Okay. And I want to make it perfectly clear. So if the son or the daughter, mom and dad has passed away, the son cannot or the daughter cannot move into the house and live there without paying off the mortgage, the reverse mortgage? Or can they keep paying?
No, if they are not on the loan, then the loan will come due, and they've got to refinance it or pay it off from other resources if they want to move into the house.
Okay.
We have done that where the borrower gave the house on a beneficiary deed to son, and we refinanced the home for son. Was one way it was done. In another case, we started with mom and dad on a reverse mortgage. When dad died, we refinanced the reverse mortgage into mother and son's name. The son was over 62 at the time.
Okay.
And then when mom passed away, son could stay in the house on the reverse mortgage with no mortgage payments.
Okay. So let's go to the scenario people think about. Can you, in a reverse mortgage, can you owe more in the reverse mortgage than what the home is worth?
No.
Listen to that. No. Okay, go ahead.
Okay. These loans, whether FHA or non-FHA, are non-recourse loans. So if the property does not sell for
To pay off the
enough to
loan.
pay off the loan, then when you sell the property, the short is picked up by either the bank or FHA will pay the short. Now, you don't want to go down the rabbit trail of how that could go wrong or not.
No, those
Okay.
will be private. They're always tailored individually. So we're just trying to talk about the
Okay.
general.
We won't go down that rabbit trail today.
Okay, on that. So then it sounds like, we've covered it again. Basically, as long as the person's alive, we don't have to worry about the mortgage being larger than the value of the
No.
home.
No.
And so, which would be a relief to someone that they can sell at any time, because if they decide that they no longer want to live in the house, they can sell it and take the proceeds and go into an assisted living.
They can go wherever they want.
Okay.
They can sell the house anytime. It's just, from a real estate agent's perspective, it is a standard sale. Get the mortgage statement is an important piece, because that'll tell you how much is owed. The public records will not tell you. But get the mortgage statement, pay off the loan, walk away with money, and move on to the next house, just like any other loan.
Okay.
You can also refinance it anytime.
That's good to know too. So if you're tired that, you can refinance it, and if you decide that you want to start making monthly payments to pay off a loan, you can do that by getting a regular mortgage.
You don't have to get a regular mortgage.
Okay, I'm sorry, I misunderstood. Go ahead.
You can make mortgage payments on your reverse mortgage if you want. You can keep making mortgage payments, and those, if you have an adjustable rate product, it will go into your line of credit will grow by the payments that you make. What causes a refinance to be attractive is if from the time you get the reverse mortgage, if your home appreciates a lot and interest rates drop, you may be able to get a new loan that gives you access to more money.
That was actually one of the questions. What happens, like this last few years, we had a huge appreciation increase on that, because we had talked about what happens if the market was to go ahead.
I'm going to shut this.
Okay.
Okay.
Back
up.
No, that's
Back
fine.
up and start the question
That-
again. I'm
It's
sorry.
more fun to have the phone go off in church. Anyhow. Okay, so we had talked about what happens if the market crashes, as
Right.
people are always talking, and now the mortgage, the reverse mortgage is greater than the value of the home.
Right.
We don't have to worry about that.
Don't worry about that.
So my next question was, what happens if all of a sudden we have a huge appreciation like we did the last few years, where in a couple of years we had a 20 or even 30% appreciation per year? What happens to the reverse mortgage? And you had alluded to it, but let's delve into that a little bit.
All it takes, you can refinance it like any other loan. The only difference between refinancing a reverse mortgage and any other loan is I just need the mortgage statement. If you'll send me the mortgage statement, I can send you the numbers and we decide it's worth refinancing or not, which is basically like any other loan. You can refinance any mortgage anytime. It just, is it worthwhile or not? And get the numbers, costs nothing to get the numbers, and then decide.
Okay, and you had mentioned for people who believe in that you should pay off any type of loan and never have a balance. Even in a reverse mortgage, though you're not required to make a mortgage payment, you can go ahead And if you have additional income you just don't know what to do with, you can actually put that and apply it to reduce the loan balance or potentially even pay off the reverse mortgage.
You can pay it off at any time. My suggestion to most people is if you have a line of credit, pay it down to a couple $100. As long as there's a balance, they can't close the loan, so you can have access to the money again. I had one lady who's a real estate agent still working, and she was making a payment, whatever the interest and mortgage insurance was, to keep the balance from going up. And she was making those payments because she had the income to do it.
Interesting. So how about all those other entities that we hear about? What happens if for some reason the person forgets to pay HOA dues, and there could be an HOA lien on the property? People, now that they no longer have to pay off a mortgage, there's no monthly payment to pay the property taxes, so they forget to pay the property taxes. Those type of situations, how would that affect somebody who has a reverse mortgage on their home?
If they don't make those payments, then the lender has the right to foreclose the property, and don't go there.
Okay, so it's just like a regular mortgage.
It's like a regular mortgage. If you have a regular mortgage, you often don't have to have an escrow account for it, but if you don't pay the taxes, then the mortgage company can foreclose the property. That's all.
Okay, so again, it's the old, as long as you pay, you stay.
Yeah, that's all.
Make sure you pay your HOA dues, make sure you pay your property taxes, and of course, if your home is free and clear, as long as you're not in Florida, Florida, make sure you have homeowner's insurance on the property.
And one other thing that creates some bad stories: open your mail.
Oh, my son doesn't get his mail but like once every 2 weeks, because he has one of those kiosks where you have to walk to it. And so we're always asking him, did you get your mail yet? Because we sent you something.
Right. Well, there's an annual occupancy certification that comes in the mail, and I've had 3 of my clients who ignored that because they didn't open their mail. And the next thing they know, they've got a foreclosure started because they didn't open the mail. This is how some of the bad stories get started, because people, they don't open the mail, they don't answer their phone, and if the mortgage company sees a potential problem and they don't respond, the only response that they have is a foreclosure. And so pay attention.
I didn't know that about the occupancy piece of paper. It says, "Hi, do you still live here?"
Right.
On that. So yeah, so that's the other thing. Make sure you go to your mailbox, wherever it is, and
open the mail.
And open the mail, and don't just throw it away without looking at it.
And another place is, as we get older, we don't handle things as well as we do when we're younger. It's inevitable. The rate that we deteriorate changes. Make some plans for who's going to handle your affairs when you can't.
Right.
Because that becomes an issue as well. And if you've got somebody in place and you've planned for that, it's not a problem. But if you don't, it can become a problem.
Okay. Well, we pretty much have covered everything. We talked about, how you can go ahead and of course not have a mortgage payment, but obviously there are far other additional options and advantages of getting a reverse mortgage. And really you would need to talk to Don about them to get the specifics for your particular situation. So I guess I would want to go ahead and finish this up, is that what would be I'm sorry, go ahead.
Let me inject one more thing. I just recently had a call, sat down with somebody who got a reverse mortgage from somebody else. But they wanted to understand the product. I was happy to sit down with them, answer their questions, even though I didn't originate the loan. They brought their mortgage statement. I could explain what what all those things meant, and happy to do that as well.
Don, thank you very much. And as I was about to say, if there was one piece of advice or the way you would counsel somebody about reverse mortgages, what would that advice be, or what would be the ultimate question that they should ask you?
Take the time to understand the product. Whether you decide to get one or don't get one, get the numbers, get the details, and understand what your options are. And then make a decision. I see too many people who want to make a decision without the information.
Okay. So half jokingly, if you will take the time, you could make hundreds of thousands of dollars, or you could lose hundreds of thousands of dollars.
Right.
Okay. Well, you know what? I'm going to try to end it on a good note. So this is part 2. It was not as long as part 1, but we were trying to cover what I would call the potential pitfalls, or the potential positive ways you can make sure you don't fall into the pit.
And in part 1 we talked briefly about the book. Somebody will call and tell me they saw this video. If they want a book, I'll mail it to them.
Yeah. And the book he's talking about is right here. It's called Why a Reverse Mortgage, Real Life Scenarios by Don Opeka. And we will also have his information below, but in case I forget to put that information, Don, how will they contact you?
303-469-1254.
And if you forget that because you're looking at my YouTube, you can always call me, and I'm more than happy to go ahead and give you Don's contact information. And then, of course, a quick little plug for myself
Right.
would be this, is I also have 2 books about buying a home and how to sell your home here in Denver. And this is basically about 30 plus years of experience. I've made it quite thin and just taken out all of the fluff so that you have all the information that you need. And it would be the same thing if you would be interested in getting Don's book. Call me or Don,
Right.
And we'll also have Don's email, so you're also welcome to email him. And he can send you the book about reverse mortgages, or if you're thinking about buying or selling a home here in Colorado, let me know, and you're not sure how that process works, I can send you that information.
Yeah. We're here to serve your needs. That's what it's about.
Okay. So, of course, if you have liked what we have talked about, please below hit the like button, subscribe to my channel, drop a question in the comments. I do regularly look to see if there's any particular comments, and I will be more than happy to respond back. If I don't know the answer because it's a mortgage situation, I'll call Don to figure out what the information and get it to you. Thank you so much for your time, and we'll see you at the next video. Have a great day now.
Yeah.
Bye.